Hello, and welcome to our January 2024 market update. We're going to see some of the lessons of 2023 and give you our outlook for 2024.
I'm Max. This
And
is
I'm
Vic.
Victor. How are you?
And we have Josh also working here alongside of us, and Karen and Amy, and Peggy, Martha, and Vince.
You know the team. Okay, our underlying thesis, we're common in all of this. 90% of the things you worry about never come to happen. And Max, you do number two.
Number two, the result. We make observations like Vic just talked about. We're making observations about what happened in 2023, and we don't make any predictions.
Why? Predictions are very difficult to make, especially about the future.
That sounds like Yogi Berra.
It does. Okay. And Occam's razor. Occam's razor is simply the simplest explanation is usually the best one.
And finally, number four, Economics 101, supply and demand applies to markets as well as most products. Basic supply and demand, it's in simplest terms.
All right, here we go. First of all, major market indexes last year. This is for the year, January 1 to December 31st. The Dow, not including dividends, price alone was up, what was it, 13.70? The S&P?
The S&P was up 24.2%.
And watch this for the NASDAQ.
The NASDAQ was up over 40%. Wow.
Woo! Yeah, I'm telling you. Okay, so here's the Dow. You see the 20-day moving average, the 50-day moving average, and the 200-day moving average. The key is all three are trending upwards.
Hey, Victor, did we call the bottom back then?
We called the bottom within 2 days, but who wants to mention that?
Wow.
Yes. S&P, you do the S&P.
All right, so the S&P and the Dow, they confirm each other. You can see it's in an upward trending motion upward. And like Vic just said, we called it within 2 days. Then the S&P, the 10-13-22, 34.91.
We started moving money back in on 10-15, convinced that was the bottom, and we were right. NASDAQ, the wild card of everything, up 43%. Wow, last year. But again, you see the three trends, the 20, 50, and 200-day moving average, all up. You can kind of see near the bottom, the one long one, the golden cross, is when the 50-day goes through the 200-day and starts to add up. So, whoops, there we go. Now, I want to make sure all of you see this because it's very important. 2023, you saw 1, 2, 3, 4 different times where the market was down 8 to 10%. And the reason I'm bringing this up, every time that happens, you have someone that says, I don't want to give up any of my gains. Should I get out and then I'll get back in? Well, if you didn't get back in within 2 days, you missed a 1370 market. It's totally impossible to be able to get in and out that quickly. Last year, again, 1, 2, 3, 4. 4 times you would have had to do sell decisions and then buy decisions, and you would have to be right. The reason I'm bringing this up, you'll see in a minute, this is likely to be a volatile year. We have an election year coming up. We have a change in the interest rate cycle, and we have a whole bunch of unknown surprises out there. There's going to be temptations when the market declines to get out. Don't. I'm going to tell you now, we've had a strong market. There are going to be these pullbacks. It is inevitable. But we've also learned, not only from last year, but from time and time again, you can't time the market. It's not timing the market, it's
time in the market.
Time in the market.
Go
ahead.
To go off that point, Victor, Warren Buffett also talks about he only wishes the market was open how many times a year?
Twice a year.
For when he can buy and when he can sell. And that's it.
Yeah, and by the way, one of his other things he says when he sees a stock going down that he likes it to go down because he gets to buy more of that company at a cheaper price.
Exactly. It's like when things go on sale in Walmart, you can walk in, you're like, oh my gosh, this is on sale, I love it. That's what Warren Buffett talks about too.
Yeah. So I want you to realize for this year, coming 2024, we're going to see declines. And I know you're going to go, oh my God, I don't want to give up any of the gain I've made. There has never been a time the market has not recovered and moved on to new highs. We want you to be aware of this before we get into 2024. Okay, Here's our landscape. We'll go back and forth. Number one, the Fed has signaled the probable peak in interest rate cycle. It's more likely now that rates will go down at some point rather than continuing up. And historically, bull markets begin after a federal interest rate cycle ends. That's where we are.
Number two, inflation reports confirm disinflationary trends in many commodities. We talked about this before in prior market updates where we had all of those charts of coffee, lumber, and such other commodities where you saw a huge spike up and then you saw a huge spike down. I remember one specifically, lumber got all the way up to 1,500 and then it went down to 500, under 500.
Yeah, under 500. And go ahead.
And so that is completely cut 300%. So it's a 300% drop in a matter of months. So commodities are in a disinflationary trend downward.
And, I have a pet peeve with those commodity prices, and you know what it is. I've seen coffee go down, but what happened to Starbucks and Dunkin' Donuts?
They don't cut costs.
They don't cut their rates, I'm telling you. Okay, next. Many think we've seen the worst of the storm. The storm is behind us. We're going into a new landscape.
In 2024 election wildcard, 50 major democratic countries, including the U.S., have significant leadership elections in 2024. I'm sure you're all aware the election that's coming in November.
Yeah. And this will likely result in increased volatility, which is why we did the slide about when it goes up and down. Don't be tempted or don't be frightened into getting out, because election years actually have good results. What are they, Max?
From 1928 to 2020, during election years, the average annual return of the S&P 500 was around 10%. I would say that's a pretty good return.
I'd say it's pretty, I'd say that's a very good return. All right, the cross current. Right now, this is going to be a difficult year. Administrations have a tendency to increase spending to stay elected, and at the same time, you now have a Congress that's hammering on decreasing spending because the budget deficit has gotten so big. So it's going to be a battle throughout the year.
So, bottom line, the 2024 outlook is quite favorable based on historical trends and the conclusion of the Fed's actions, but the election year promises to include volatility. Look at that. The VIX will probably be a little bit higher towards the end of the year.
Yep, and if you want to lower your risk, we'll buy some CDs, but I'm not a big advocate because of history. But watch this. Here's the deal. This is a chart of short-term interest rates, money market rates. Right now, money market rates are a little over 5%. And we have people saying, well, at 5%, why don't I just put it in that? I don't have any risk. Well, they forgot for the last 10 years, 1-year CDs were under a quarter. Look at this chart. The last time they were over 5%, 2 years later, they were 0.16. The money market rates are not long-term rates. If you actually look, they redo their yield. Yields are good for 7 business days.
All right, so these are investment strategies to take advantage of lowering rates. We have on the top muni bonds. Then to the right, we have dividend stocks with the history of increasing dividends, which is the dividend portfolio.
Yep.
And then on the bottom, we have CDs, longer term CDs to lock those rates, and finally preferred stock. You could call us, ask us any questions about any of these investment styles or investment strategies.
Yeah.
Call us and ask us any questions about these.
So that's really for those that are in the fixed income side, not the growth side. This is for fixed income money. So what do we have now? We all hear this artificial intelligence. And artificial intelligence is, in fact, changing the landscape. And here's the deal. You either adapt and improvise, or what happens if you don't, Max?
You get left behind.
You get left behind. So what are we doing?
We're adapting and we're improvising. And so we have included and improvised in our practice generative AI and income tax planning software tools and estate planning tools that reviews your tax returns and can create planning opportunities to minimize lifetime tax liability, as well as look at your estate documents. It's pretty simple. We literally scan your trust documents in or your tax return in, and it gives you a snapshot of your estate or what you can do to help with your taxes in your estate and in also your taxes.
And it looks for any problems, looks for anything your accountant may have missed. We try to work with the accountants.
Correct.
We're not doing tax returns. We're just doing tax consulting. Okay. So what happens with bull and bear markets historically?
Well, Victor, good thing you
Glad
brought
you
that up.
asked.
The pattern has repeated itself since 1926. Victor talked about, hey, we hit the low point in October 15th of 2022. And we were talking about that we've always had this slide in for a while now. Bear markets usually are on average are 11 months. That bear market was probably right around 11 months. And bull markets, Victor talked about, hey, bull markets are around 6.5 years.
How long?
6.5 years.
So I got 11 months or 6.5 years?
Yeah. I'd take the 6.5 years, wouldn't you?
Absolutely.
And especially Victor said, what happens during an election cycle?
Yep.
The S&P is usually up around 10%. So there's another bull market leg up. We've already had a good year last year, and there's a potential for another good year this year.
All right. So we've all seen this chart, and we're going to talk about this for a second. The average market return, a little over 6%. The average investor gets what, Max?
2%.
Wait a minute. So you're telling me the market did 3 times 300% better, 6 versus 2? Why is that?
Emotions.
We are your financial coaches. Here's the deal. We just saw, everybody knows New Year's comes out and everybody goes to the gym. Well, Forbes did a health survey. The average do-it-yourself person who goes to the gym, 43% lasts a month. By the end of 3 months, only 13% are still doing it. On the other side, those that work with a personal trainer, with a coach, they last longer, they're more successful, and it works because of why. You tell them why it works.
It works because 5 things: accountability, customized programs, expert guidance and support, progress tracking, and then finally social interaction.
Wait a minute, that sounds like we do.
Exactly.
Are we accountable?
We're accountable.
Huh? Do we do custom programs?
We do.
Oh man. I hope we're expert guidance and support. And do we track our progress?
Of course. And then social interaction, we're talking to people.
And when they're panicking, who are we talking to?
We're talking to
them. That's the benefits of working with a coach. We are your financial coaches. And you can look at anything out there, any sport, anything. Notice the best in every sport and every athletic endeavor. The best ones have coaches for a reason.
Because it brings them discipline.
Absolutely. And wait a minute. Discipline, accountability, a customized program, expert guidance, progress tracking,
and social interaction.
And you get to talk to us.
Yeah.
All right. So what do we do? Why do we do this, Max?
We'll tie it all together. We do this because those that fail to learn from history are doomed to repeat it. Those that learn from history can prosper. With coaches, you can prosper. We've already learned the history, and we're telling you how to achieve your goals. We add historical context.
Here is the difference between working with us and watching CNBC. Our perspective is your medium and long term. We're looking for the next 2 to 5 to 10 years. If you look in CNBC, what's their historical perspective? How long are they looking at?
Last hour?
They're looking, yeah. Their long-term view is 5 o'clock today. It drives me crazy, but it is what it is. All right, we have some more on-demand workshops. What are they?
All right, first off, we have estate planning, how to protect your kids from their inheritance. What do we have next?
Taxes in retirement, manage and avoid the tax traps in retirement.
Then we talk about Social Security, optimizing your benefits and avoiding tax traps.
And then finally, savvy IRA planning. Many people make mistakes when they need to take money out, what their RMDs are, what are the rules. And one of the rules with retirement planning in the IRS, as soon as you understand the rule,
they change them.
They change them, exactly correct.
And also we talk about in that one, in the IRA planning, is Roth conversions and if they're appropriate for you.
Oh, absolutely. Roth conversions are a very big issue. All right. We also do some special seminars. Everybody these days is getting hacked. So we have our in-house, can I say nerd or do I just say technical support?
Technical expert.
Yes, Josh, our latest financial advisor, is also very tech savvy. So he has done a
Marvelous job in
great
presenting
job
this
on
video.
cybersecurity. It's on our website. Take a look at it. There are things you need to know. We've had a number of clients that they have almost had some big losses due to cybersecurity.
And Josh breaks down that video and points out different hacks in that video. And if you have any questions about cybersecurity, you can give him a call. He'll help you out.
Absolutely. And then finally,
thank you for joining us today. And we're here.
We're here
looking out for you.
All right. Thanks for joining us.